Hello, everyone. My name is Zulfiqar. Welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what we write on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. John, the outlook for crude oil may have taken a hit of late, but the outlook for marine shipping companies remains robust. That's due in part to a strong product demand, low global inventories, improving refining margins, and high export volumes that have generally supported the tanker market. However, thanks to an aging global fleet, many vessels built in early 2000s have now reached scrapping age. The recent European Union sanctions on Russia has further tightened tanker supply, potentially pushing more vessels into the shadow fleet. Um, by the third quarter of 2025, a total approximately 800 tankers have been sanctioned. The ban on products refined from Russia crude oil should also contribute to market inefficiencies, expand trade routes, and increase ton miles. For the rest of 2025, the product tanker market is well positioned for a strong fall and winter. And those tailwinds are great news for Hafnia Ltd. They're traded on New York Stock Exchange under symbol HAFN. John, what can you tell us about Hafnia?
Thanks, Mo. Yeah, Hafnia operates a fleet of over 250 vessels. The Singapore-based company is actually the largest operator of product and chemical tankers in the world. The majority of its vessels operate in the spot market, primarily through pools of similarly sized vessels, allowing Hafnia to maximize fleet utilization and revenues and cyclical freight rate recoveries. Now, the company transports everything from clean and dirty refined oil products, vegetable oil, and so-called easy chemicals to oil companies and chemical companies, as well as trading and utility companies. If you're not familiar with Hafnia, you're not alone. Hafnia only began trading on the New York Stock Exchange, I think it was April 2024, but it did begin its journey on the Oslo Stock Exchange back in November 2020.
On digging in the numbers, I see that Hafnia reported a solid second quarter earnings beat.
Yeah, now for the second quarter ended June 30th, 2025, Hafnia reported total operating revenue of $340.3 million and net profit just a little north of $75 million or 15 cents per share. Now, Wall Street was actually looking for earnings of 14 cents per share. Time charter equivalent or TCE earnings were $231.2 million, resulting in an average TCE of $24,452 per day. Now, that's up from the first quarter average TCE of $22,992 per day. Now, adjusted EBITDA was $134.2 million. And as of August 15th, 2025, which is pretty much around the time the company announced its second quarter results, 75% of third quarter earning days were covered at an average of $25,395 per day. And 48% of the earning days for the remainder of the year were covered at $25,158 per day.
On switching gears a bit here, I see that it also increased its second quarter dividend to a little over 12 cents per share.
Yeah, and on the dividend front, Hafnia announced that it raised its dividend payout ratio. And now that's the percentage of earnings paid to shareholders as dividends. And it raised it from 70% to 80% when its net loan to value or LTV is between 20% to 30%. That can be confusing. When the net loan to value falls below 20%, it will raise the dividend payout to 90%. And the end of the second quarter net to LTV ratio was 24.1%. Now, this resulted in the company distributing a total of $60.3 million or 0.1210 cents per share in quarterly dividends, or 63 cents per share on an annualized basis for a pretty big forward dividend yield of 10.2%.
And looking at the HAFN stock, this stock is doing amazing. It's up more than 75% since April.
Yeah, since being listed on the New York Stock Exchange, HAFN stock has done fairly well for the most part, hitting an all-time high of $8.99 per share back on May 31st. That was in 2024. Now, shipping stocks hit some rough water in the last quarter on geopolitical tensions and weak demand from China. The broader market hit further turbulence in early 2025 after President Trump announced tariffs on Canada and Mexico, and then again in early April after he unveiled his global tariffs. Fortunately, HAFN stock has been rebounding since hitting a 52-week low of $3.47 per share in April. Now on October 23rd, HAFN stock hit an intraday a high of $6 and 42.5 cents per share for a short-term gain of 78% over April lows. Now, those are big moves, but HFN stock still needs to climb 4% to match its 52-week high of $6.43 per share and roughly 23% to hit its May 2024 record high of $7.62.5 per share. Now, conservative Wall Street thinks it will hit fresh highs over the coming quarters, with analysts providing a 12-month share price forecast range of $7.38 per share to $10 per share, and that points to a potential upside of roughly 19.5% to 62%, at least of this recording.
Thank you so much for your insights. Just to recap, Hafnia Ltd is a marine shipping stock reporting consistently solid financial results, which helps support its reliable ultra-high yield distributions. After reporting another solid quarter, management noted that this positive momentum has continued into the third quarter, with continued growth in trade volumes and ton miles. To that end, the bearish U.S. Energy Information Administration, or IEA for short, is forecasting a 0.7 million barrels per day increase in global oil demand in 2025 to 103.7 million barrels per day. That's good news for HAFN stock and its reliable dividend. It's also encouraging for the 194 institutions that hold over 30% of Hafnia's outstanding shares. Some of the biggest institutional holder of Hafnia stock include Acadian Asset Management, Vanguard Group, and JP Morgan Chase and Company. And even larger, over 45% of outstanding shares are held by insiders. This high insider ownership should entice management to deliver strong results. That's it for today. And make sure to go to incomeinvestors.com now, or you can find the link to the website in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.